It is Wednesday, the 22nd of October, 2025, and this is Market Watch, your number one stop for smart, simple, and actionable market insights. Proudly brought to you by the number one financial literacy platform in the whole of Nigeria, Nairametrics. And as you might have guessed, I am here with smart financial analyst, Mr. Mukhtar from Finance with Mukhtar, and seasoned analyst, Mr. Idika Aja, and we are here to discuss the Market Watch. So, how are we doing today?
Well, great week, great day, beginning of this day.
And you, Mr. Aja?
Yeah, it's okay. It's okay. Wonderful.
Okay, so thank you. Okay, so shall we begin, gentlemen, with the numbers? And by that, I mean the NGX has been extending its bullish streak. We saw the all-share index climb by 1.01% to close at 151,456.91 points, bringing the year-to-date return to a massive 47.15%. As we speak, market capitalization now sits at 96.14 trillion. Mr. Mukhtar, where it gets a bit dicey is the fact that we had 27 gainers and 29 decliners, meaning that this isn't an across-board rally, but a selective one. Why are investors still showing confidence even when this is so uneven?
Well, like I said, like I always say, all-share index sometimes gives you the broader view of what the investors perceive investor sentiment. And sometimes all-share index also can be very deceptive. If you look at that all-share index, if you look at the gainers and you realize the stocks that are the gainers, you realize it's only Boas men that is there, and that also will have impact on the all-share index. And then when you look at those other stocks that gain, then you realize that most of those stocks also are not stocks that are very liquid, like we spoke about liquidity last week with Indica. But what I'm excited about the market yesterday was to see stock like Fidelity increase in volume, assets increase in volume. Especially when you look at the broader terms of these two stocks, as stocks were normally at this moment like this, they should have released their half-year result, and investors would have even collected their interim dividend, and will be thinking towards the third quarter and the final dividend. But here we are still waiting for regulators to give approval, and yet investors still has good appetite for that stock. So I think that for me is one of the good things I saw in the market. And again, to borrow that, like you said, confidence and sentiment is high. If you look at the volume of people that were ready to sell and people that were not ready to sell, you realize that a lot of people were not ready to sell as at yesterday. So they are still seeing value in the market going forward.
Okay, thank you for highlighting the fact that it is attributed to strong fundamentals and people looking out for, the Q3 results. So, Mr. Idika, let me bring you in here. With the ASI now above 151,000 points, do you think this rally is sustainable if earnings results fall short of expectations? I beg your pardon.
Yeah, thank you very much, Shegu. We discussed that. We said that earlier. And we projected, if you can remember, we projected that this thing will maybe get up to, the market cap will reach up to 100 trillion. We said so. Yeah, I believe even for the report we just read, if you look at the drivers where you have the Dangote Cement, MTN, UBA, and Access. Yeah, like Mukhtar really pointed out, yeah, maybe investors are waiting for Q3 earnings, and it's likely to have an impact going forward.
Okay.
So, but give and take, I know the earnings, Q3 earnings, that is 9 months, are going to be splendid looking at what we've had so far. So, and if they come out fine, solid, yes, it's going to sustain the momentum.
What about you, the fall short of expectation?
Well, there are reasons, not reasons why people just buy stock, not only about the earnings. It could be sentiment too, and it could be expectation too that the company might even do further, because this Q3 is not the end of the year.
Absolutely.
We still have another quarter coming, coming in. But I think overall the most important thing there is maybe that will even come in is the return, the capital gain, when you look at it compared to inflation. So I think so far we have about 99 stocks giving return above inflation rates, unlike 65 we had last year. So I think investors will equally factor that in because, as the yield from fixed income because of the drop in inflation rate is dropping, people will not traditionally migrate to stocks. So it's not only about earnings too, it's about what happens in other asset classes.
Thank you for that analysis. Mr. Mukhtar, while the numbers are looking strong, as we know, we still understand that sector performance is uneven somewhat. So with oil prices steady and FX reforms still evolving, what's the real strength in this market as we speak today?
Well, you said two things. Reforms and oil, steady oil price.
Yes.
Now, when you look at reform and steady oil price, what do we lead to? What are we trying to achieve as a country? Is to stabilize our exchange rate. Is to drive in more inflow rather than just depending in one sector. Like our inflow would normally just come from oil and gas alone. So we are now going to be seeing inflow coming from Nigerians in the diaspora. We are seeing inflow coming from foreign portfolio investors. And then, coupled with our improvement in our oil output. So what will now happen? You see that what will now happen is that investor confidence will be strong. And then you attract more foreign direct portfolio investors into Nigeria. Portfolio investors, before you begin to get the direct foreign investors into the country. So when you look at that sentiment, you begin to look at which sector really drive those. It's always, first of all, when the reform starts, the first sector to benefit or to suffer is always the financial sector. The first sector to enjoy any reform is also the financial sector. So that sector will benefit. Oil and gas sector, if you look at the stocks in the oil and gas sector, it has been mixed. It has been mixed in terms of performance. When you look at Total, you look at Seplat, you look at Oando, you look at Arade, you see that the performance has been mixed. Now, would that be driven later by a good oil price, stable oil price? I think the market will determine that. But if you look at the consumer goods sector, you realize that this was a sector that was largely hit by those reforms I'm talking about last year. But we've seen really huge recovery from that sector. And if you go through that, you realize that they are one of the best performing sector in the market at today. Some of them have given investor up to 200 or up to 100 or 200% increment in their shares at the beginning. Then you go to the ICT. You can talk about patronage of MTN.
Yes.
People are waiting for that third quarter result from MTN. It's going to be a huge game changer. Remember, we saw the second quarter result. We saw what the new tariff and data did to that result. This time we expect that it could be better because again, it will be this half year we didn't see. So we only saw one month of those new data policy. We might begin to see 3 months of those data policy incrementing tariff and data, how that will impact. So the reforms. I mean, like I said, it looked very, very promising. And to add to what Indiga said, whether the market goes down or goes up, sometimes what people don't know is that investors are already pricing both the positive and the negative. They price it in. So sometimes you see result comes and the impact on the share price is not much. Sometimes you see result come and the impact of the share price more. That is when the result are beat investors' expectation. So definitely, I think there are some companies that when the result comes and are negative, some investors get excited because they see the potential in getting more and looking towards the long term. So I for one don't think that.
I mean, I was going to even ask on that still Blaine, just like I asked them, if the Q3 earnings underperform, what is the earliest sign that you will know that this rally is probably running out of gas?
Immediately the result comes out, the market will definitely compensate you for whatever result you brought in. Look at PZ, the market has compensated them for the good result that they came in with. The market will always compensate you if you give them good results. And the market will also punish you when you give them bad results.
Smart. And Mr. Idika, finally on this topic, with treasury bills yields still tempting, still doing very well, do you think we could see a shift back into fixed income soon?
Yeah. On a broader level, 15% yield, anyhow you look at it, it's still okay.
Okay.
Compared to where we are coming from. Though I think last year it was trading around, some of them were offered around 20, 23, 24%. Now with the cut in rates and the drop in inflation, basically it will come down. So, but it is still a good yield at 15%.
Okay.
Still a good yield. And that is what I tried to explain earlier, that with the yield dropping, definitely, because the essence of the whole thing is that the return you are getting must be able to surpass the inflation rate. And we have inflation at 18%, 18.02%. So that means the spread between the inflation rate and what we are getting will give you whether it is a real positive real return or not. And with Treasury bill giving you at least a 265-day bill, giving you, I think, it's a 15.77. You know, they are doing auction today. Giving you at 15.77 is still below the inflation rate. That means it's still negative. Real return is still negative. But even at that, it is still a good return.
And you think it will cause people to shift into fixed income soon?
Yeah, the Treasury bill is part of fixed income.
Yes.
It's a part of fixed income. It's within the fixed income spread, only that it is a risk-free asset.
Okay.
It's only that it's a risk-free. What people will shift, people will move to stock, because like I really mentioned, so far this year, over 99 stocks have given you return above that 18% inflation rate.
Okay.
So that means that stock, the equity market still has the highest spreads, and it can equally give you the real return more than any other, except all those alternative assets that are too volatile, like crypto, those ones, forex. But when you talk of the traditional assets, the stocks are better.
Thank you so much for that analysis. And at the moment, gentlemen, we will segue into the hospitality industry, where we have Transcorp Hotels PLC posting an impressive 10.1 billion pre-tax profit for Q3 2025, up by 71% year-on-year from 5.7 billion naira in Q2 2024. That lifts its 9-month profit to 22.4%. Now, I understand pre-tax profit is not one to excite Mr. Mukhtar. However, this means a 36% jump from last year. So, Mr. Mukhtar, starting with you, these are massive numbers. And so how much of this performance do you think is from smart management? And how much do you think is from Nigeria's post-subsidy travel rebound?
Well, for post-subsidy, I think I'll leave that to Indika. Maybe you will know more about post-subsidy. Let me look at the smart move that they have made. I think if you look at that numbers, what I'm excited about is that you see that it's come from their core businesses.
Yes.
Room, rentals, beverages, drinks. You could see, you can go on and on. You see the kind of performance those are, but that's a hotel core business. Then the beauty about it is that when you look at the numbers that they are giving you, you look up in terms of room rentals, giving about 48.1 billion. It's huge. That means a lot of people are patronizing them. That means they are doing something very, very well. And again, sometimes people stay in an hotel and they don't want to eat the hotel food or everything. But I said food and beverages, I gave them almost under 2.1 billion, about 21 billion. So that tells you that it's where people really, really want to stay. You look at the rentals also, that means they have hall. And if you look at that numbers going for as analyzed by Nairametrics, you realize that they said a 5,000 capacity hall also is being built. Yeah. So you can imagine what the profit will be when this 5,000 capacity hall will be added to it. Then again, you look at also the area of financing. They are liquid. They seems to not to borrow so much from their sister companies. borrowing has come down. You look at their asset also. Their asset also has improved. So you look, then you go down again. You look at their earnings also has grown. So all these things add to what I think I like about the result.
Okay.
Especially when a company result is driven by its core competence, is also that tells you that they are doing things right. You know, sometimes you see company asset, a company result is driven by these exceptional items. Maybe they sell off these, they sell off, but this one is driven by their core competence, their area of business. I think
sounds like great cost optimization.
Perfect cost optimization. Though I have my own conservation when it comes to the price. And then we go back to that liquidity issue. That liquidity issue is still a main issue. You can't have this kind of a beautiful result, and investors are trying to be part of this type of result, even queuing into it for the near future, and they are not able to get it. And the price keep going up because of the low share float unit of Transcorp. I think they should do more.
And I think you even touched on the next question already, talking about Nigeria's post-subsidy rebound. That just spoke to corporate events, weddings, and, conferences, them being able to do that. And Mr. Idika, just briefly on this 5,000-seater event center that seems to be a key growth driver within that firm. Do you have any idea what kind of revenue impact that would have? Although Mr. Mukhtar has already touched a bit on it, on this going forward?
Yeah, well, if you dissect Transcorp Hotel financials, especially the income statement, you will see the driver there, revenue drivers. Like you mentioned, you have the room sales, then you have the food and beverages. But the key thing there, one, is that the room sale contributes about 68% of total revenue. And again, if you check the cost to income ratio of the room, the segment that the room sales segment, and the food and beverages, we'll see why they are making that profit. Because in hospital business, when you do the initial investment, which goes back to what we've just said.
Yes.
Now, when you expand, we have put in that money. So the only one you cut the expense. The expense comes in form of depreciation and amortization after the initial investment. Now, after that, you can now see that the room sales is giving the company much revenue than food and beverages. And even in terms of cost, I think that one has about 23% cost to income. The other one has over 60%. That is food and beverages. That they are spending more to generate revenue from food and beverages, while they are spending less to generate revenue from room and sales, because they have already spent some money there, just like the expansion you are doing. So you can now see how and why they make money.
Yeah.
And apart from that, the another key thing you have to look at their margins, the profit margins. At that upper level, that gross profit margin, they're having about 70%, which is very, very impressive. Then come down all to net profit margin, where about 20. So anybody that is having a net profit margin about 20% is still okay. So why they're having that, this expansion will equally help them. Now, their total asset base is about 154 billion. And out of that 154 billion, I have about 122 billion coming from PPE, that is property, plant, and equipment. So you see, they're already expanding, which equally boosts that revenue. Because if they expand, definitely they will not spend, their overhead will come down because they will not spend much on overhead subsequently. And that will equally increase their revenue and at the same time their margins, which is very, very impressive.
Okay, absolutely get that. But then with inflation and operating costs still biting, do you think they can sustain this level of profitability in Q4? Because that's one question investors will be asking. With the stock already at 41.9 year to date, do you think it is still a buy, or has the market fully priced in the growth story?
Okay, there are two questions you are asking there.
Yes, two questions.
Whether
they'll be able to sustain this level of impact in Q4?
In terms of cost, I think if you check the relative growth, when you take up the cost of sales and operating cost relative to revenue, you can see that revenue growth was a bit higher than cost and cost of sales and overheads. So in that case, yes, the revenue is going faster than cost. So
Okay.
they will be able to sustain it.
All right.
And besides, even at that high level profit margin, gross profit margin of 70%, operating profit margin of about 38%, and the other one at 20%, they are okay. They are stable. That they're okay, it's okay. Now, when you come to whether everything has been priced in, now if you look at their price to earning ratio, which is a key metric where you can use to determine whether it is right, it is high. It's about 99x. I mean, they're saying that for every 1 naira earning the company is making, shareholders are paying about 99 naira, which is extremely high. So what it means, one, Transcorp has to earn more to sustain that confidence. Because if there is any drop in their earnings, rating will come in. And their valuation might come down. So at that 99x, it is very, very high. It's showing confidence, no doubt, but it could equally be overvaluation unless they are able to sustain their revenue and earnings.
Absolutely. Thank you so much for that analysis. And now segueing into the last topic here, we will be moving into policy because this is where the real wealth decisions are made. I know one of the most underrated market drivers right now, government policy. We can see that from new capital gains tax rules to borrowing to tight monetary policy and recapitalization in the insurance space, Abuja is quietly reshaping Nigeria's investment map. And Mr. Mukhtar, what do you think is the big picture here? And how do you see all these moving parts connecting for investors?
Well, I think, again, it comes again based on perception and how many Nigerians are really benefiting from the reforms. And how many Nigerians have the liquidity to take advantage of it. Ordinary reforms these reforms are bold reforms that actually will create wealth for a lot of Nigerians. But again, it all also depends if you have the liquidity to take advantage of it. Now, where I think we really need to say these reforms so that a lot of Nigerians can benefit from it is in the area of job creation. If this reform are bringing more jobs to Nigerians, then disposable income will be much in their hands. And Nigeria is a consumer-driven economy. That means a lot of people will consume more.
Okay.
So that will also help businesses and will also help companies. So those are the key. But once the reform starts, a reform does not hit the bottom. Immediately it kickstarts. There's no reform in the world that anybody can tell me that immediately they come out with the reform, the bottom part of the reforms are the ones that we enjoy. It's always that reform create opportunity for investors, for wealth creation. And like I said, investors that have liquidity. After that, you begin to get to companies. Companies begin to make more profit, and then you now begin to see, by virtue of those company profit, there's an expansion, and those companies also are now expanding to other parts, and now having more rooms to expand, more to do more business. Then they are employing more people. That is when the reform begin to hit the down of the down.
Okay.
So the reforms have really helped create wealth. Indica just talked about the capital market. That gives you a gain of about thus far about 47%. I don't think any part of the world you can get that in terms of capital appreciation. We are not talking about dividend payout. And that reform, this capital market drive was driven by two reforms: the removal of subsidy and the floating of the naira. And we've not seen much of it because, again, until recently, that the naira is looking very stable. So it did not even attract a lot of foreign portfolio investors. So by the time the naira is really steady, and you have this two-way exchange system, exit and you can exit and you can come in, then that is when you begin to see the impact on the equity market. Because largely now, what is driving the equity market is the retail investors. And like I always say, retail investors are those that we need cash times and time. Yeah. But when you talk about foreign portfolio investors, those are the ones that really give the market a long bullish runs. And this reform would definitely drive them in.
Absolutely. I was about to speak about the firmer naira and domestic borrowings, but then, Mr. Idika, finally, with these capital gains tax rules and enforcement, how do you think investors can protect their profits from tax erosion?
Okay, one, let's look at, we are talking of equities. Let's focus on that. The capital gain tax, it has been there. It was even introduced. It's not now. It was introduced since 1967. So it has been there. Only that capital gain tax was at a flat rate of 10%. Now it's now progressive, depending on how much you make. And the rule says that anything below 150 million, that's a collective sales in a year below 150 million naira, will not be taxed. That's what it says. Now, what it means is this. It will not, because what the government wants to do is to maybe tax those people that are earning more.
Okay.
Those people that are earning more. That's why it is progressive. So if your total transaction in a year is less than 150 million naira, that's the equity transaction, you will not be taxed. And I think what we have to do is that how do investors key in? You understand? How do they navigate this challenge, so to say challenge? And one of them, is to ensure, that you are aligned. If you are retail investors, I hope the government will not come after me. If you have to stagger yourselves.
Yes.
Stagger yourselves for those equities that are not doing very well. But I doubt whether any retail investor can be able to accumulate and make transaction of over 150 million naira in a year. So, but if you can't do that, if you have the portfolio that can do that, at least those assets that are not doing those laggards that are not doing very well, at least you offload them intermittently, so that you're able to stay within the range.
Okay.
You're able to stay within the range.
Thank you so much for that analysis, Mr. Idika. Our time is way fast spent. And finally, Mr. Mukhtar, with the FG borrowing more, how do you suggest one playing in the market, in the bond market, long term or short term? In 1 minute, please.
Long term, if they are borrowing more,
okay,
that means they need more money. And again, I don't see them not borrowing because oil price has not reached their benchmark of $25. Budget benchmark of $25. Okay. So there will still be a lot of borrowing. So for safer investors, the bond market is still there for you to take opportunity of.
Okay. And what about the FX angle? With the CBN still tight, should investors favor Naira assets for now? At least pending when the FX liquidity stabilizes and we begin to see renewed demand.
I'm always for Naira assets. I'm always for Naira assets because I keep saying people the kind of returns that you get in Naira assets, you don't get it in dollar assets. And by the time you convert back the Naira to the dollar, you realize that even with the volatile exchanges, you've made so much profit holding the Naira, even when you convert it to dollar. And that is why the foreign investors will always buy Nigerian Eurobond, because of the time of high return there were. So for me, I think with liquidity improving also in our foreign reserve, we don't expect that to stop anytime soon. I think the Naira Naira assets are better for you because we've not seen the end of the downward trend of the dollar. We've not seen the end. I don't think we've seen the end, especially if government keep on improving. So Naira asset is better now.
Okay, and finally, not to leave out the insurance sector, do you believe NICOM's recapitalization could create new winners? We've seen Anchor, Mansard, Custodian has had our attention meeting those capital requirements already. What's your opinion on that sector?
I think it will. It will create new billionaires. It will create new investors. It's a gold mine. My fear is that we've seen it happen before, and we did not see that gold mine. This is not the first time we are seeing the insurance sector driving towards recapitalization. After the banking sector recapitalization sometime in 2003, I think we have the insurance recapitalization. And we didn't see the kind of movement that we see in the banking sector. Okay. But this time with the kind of bold reform and those that are on the hell of affair in their regulatory body, I think this is the best time to key into those insurance sector, especially with those stocks that you have just mentioned.
Absolutely. And finally, for you, Mr. Idika, and for the FMCGs or agro-processing plays, do you think they remain great hedges against FX volatility, being that they earn in Naira, source locally, and benefit from import substitute policies?
Of course, it will. Because when you give them waiver, definitely it will impact on their cost.
Okay.
And with FX volatility being a bit stable, moving from, last year we started from, ended about 1,500 and 500, a little bit about 1,500. Now it has come to about 1,464. So you can now see that stability, which gives you that stability, and the exchange rate, both the import we are bringing in will come in a little bit lower. And that is very, very important for them. And the most important thing for the consumer goods is the drop, is continuous drop, what both in inflation rates and MPR, because if inflation rates continue to drop, that will increase the consumer purchasing power and people will buy more. The same thing with the MPR. If you cut it, that will now reduce their interest expense. You can see what they have done this year compared to what they suffered last year. So and that's why people are piling into the consumer goods sector. They are doing very well. I think the best index so far this year. Yes, I see that here. I see that one of the policies that is driving even the stock market.
Thank you so much for that analysis, Mr. Idika and Mr. Mukhtar. And remember, as a smart investor, you should not just follow the headlines, you should follow the signals behind them. Till the next episode on Market Watch by Nairametrics.